Hey guys, welcome back to the Bitcoin Fortress podcast, the weekly high signal update for Bitcoiners. Today is Sunday, January 4th, 2026. We are at block height 930901, Moscow time 1097, and fees are 1 sat per VB across the board. Basically a quiet mempool week, which is its own kind of signal. As always, this is not financial advice, so let's get into it. The big story is not one headline. It's the same force showing up everywhere. Bitcoin is getting absorbed into institutional plumbing, while the Bitcoin native world keeps building tools that reduce trust and increase sovereignty. So we'll hit flows, treasuries, protocols, software updates, mining economics, security, and the regulatory weather. Jumping right in with macro and markets, Bitcoin ends 2025 down, first annual loss since 2022, showing rising macro correlation. This is from a Reuters article. Reuters frames 2025 as Bitcoin's first yearly loss since 2022, despite hitting an all-time high of over $126,000 earlier in the year. The key takeaway isn't the number, it's the reason. Policy shocks, tariffs, export controls, according to Reuters, rippled into risk assets broadly. Bitcoin's evolving identity from an uncorrelated outsider to global liquidity barometer, that's bullish long-term adoption, but it changes short-term behavior. Correlation is often a phase of monetization. As Bitcoin becomes more widely held, it trades more like a macro asset until it eventually becomes the measuring stick. Another article from Reuters pointed out the first trading day of 2026, macro tape up, Bitcoin up with it. Reuters notes Bitcoin around 89.8K on January 2nd in a classic risk-on tape. Again, a reminder, Bitcoin doesn't trade in a vacuum anymore. Dollar yields, equity positioning, these all shape flows. If you're a long-term holder, zoom out if you're building a business plan for volatility spikes around macro events. Moving on to institutional flows and treasuries. This article from Yahoo Finance, spot Bitcoin ETFs start 2026 with strong inflows. The headline, ETFs opened the year with meaningful inflows. The plumbing bid is alive and well. Flows matter because they're structural, not narrative. Retirement platforms, RIAs, bank channels, they average in. ETF flows are basically the TradFi on-ramp turning into a conveyor belt. It doesn't remove volatility, but it raises Bitcoin's floor of attention. Next, we have Tether adding about 8,888 Bitcoin, or $800 million, to their holdings. This article from CoinDesk. By the way, links to all the articles that we go over here in the show notes, so check that out if you want to read for yourself. Back to this article, Tether is adding 8,888 Bitcoin. That's a signal. Stablecoin giants are becoming Bitcoin balance sheet entities. This is a quiet trend. Companies that benefit from crypto liquidity often end up storing value in Bitcoin. Now, whether you love or hate Tether, this is demand that's not coming from retail hype. It is treasury strategy. And speaking of strategy, next article from Barron's, strategy resumes buying, 109 million purchase, 1,129 Bitcoin. Strategy continues to operate like a Bitcoin acquisition machine. Small buy this week after pauses. Their method, capital markets to Bitcoin. Whether you view it as genius or risk, it's undeniably a new corporate playbook. This is financialization. It doesn't change Bitcoin's rules, it changes who holds it and how they're forced to behave under market stress. Next article here from MarketWatch. Prenetics pulls back from Bitcoin strategy, but still holds Bitcoin. This is a smaller public company that reverses the hype. We're not buying more right now. Now, this is healthy. Bitcoin adoption isn't a straight line. Some firms experiment and refocus. But you can contrast this with Strategy or Tether. Conviction holders treat Bitcoin as the reserve asset. Dabblers treat it as a trade or a marketing strategy. And I guess you have to ask yourself, which one are you? Are you convicted or are you a dabbler? Next, from DL News, 2026 ETF growth expectations and bank distribution opening. Analysts projecting big ETF growth and more distribution channels. Even if the exact numbers are off, directionally, it reinforces access is widening. And a reminder for Bitcoin native, more paper Bitcoin access makes self-custody education more important, not less important. And of course, we always advocate here, not your keys, not your coins, hold your Bitcoin in cold storage and sleep well at night. Not have to worry about the exchanges getting hacked and your Bitcoin stolen. Next, we will move on to protocol, software, and Lightning. First up, from Delving Bitcoin, Bitcoin Core version 30.1 was released. Core version 30.1 is out. Maintenance releases don't sound sexy, but they're the heartbeat of the network. Again, sort of framing it, reliability, performance, bug fixes, ongoing hardening. Bitcoin wins by being boring at the base layer and innovative at the edges. From Lightning Engineering, Taproot Assets version 0.7 was released, multi-asset Lightning protocol tooling. Taproot Assets is about using Bitcoin security plus Lightning speed for asset movement, including stablecoins. So even if you're a Bitcoin-only maximalist, the strategy can be bring liquidity to Bitcoin rails. Is this Bitcoin becoming a settlement layer for everything, or is it complexity creep? We need to watch how it affects Lightning usage and operational risk, but again, innovation at the frontiers. Next up, from Bitcoin Optech. This is newsletter 386. Optech is great for seeing what serious builders are thinking about. Two high-level concepts here to highlight. Vault-like schemes are ways to make stolen coins harder to move, and negotiating P2P features, which allows coordination without forcing changes. The future of Bitcoin security is not trust me, it's design it so betrayal is expensive. And wrapping up this segment, Lightning volumes. Public company Lightning operator reporting record activity, which is an enterprise signal. This was from the Stock Titan press release. Whenever you see boring metrics like volume and processing rates rising, pay attention. Lightning adoption often looks slow until it looks inevitable. Lightning is best understood as email for value. It won't be one killer app, it'll be thousands of small ones. And you love to see the Lightning Network grow because, of course, that's the best payment network that we have for using Bitcoin for payments, and it's also quite private and fast and cheap. Moving along to mining and network economics. First article from Yahoo Finance noting that mining difficulty is near record highs heading into early January. Difficulty and hash rate tell you miners are still investing, still competing. The post-halving reality, though, is that margins tighten and the weaker operators get filtered out. High difficulty is a security flex, but it's also a profitability squeeze that pushes miners toward efficiency, better power, better firmware, better operations. Next, from CoinWars, difficulty adjustment timing estimate, near-term network heartbeat. Difficulty adjustments are Bitcoin's autopilot, keeping block time stable. And again, this is sort of why central planners hate Bitcoin, because it self-regulates without permission. Code is better than committees, rules greater than rulers. Next from the block, 2026 mining outlook, revenue up, competition up, AI HPC convergence narrative grows. Miners are increasingly looking like energy companies plus compute companies. The AI HPC tie-in here is that miners monetize power infrastructure. Bitcoin provides the buyer of last resort for electrons. And even if miners diversify revenue, Bitcoin mining remains the anchor that you just can't fake. Moving along to the next segment, security, crime, and the war on optionality. We have an article from The Verge that talks about the Bitfinex 2016 hacker, Ilya Lichtenstein, who was released early to home confinement. This is a cultural story and a security reminder. Old hacks echo for a decade. Bitcoin's ledger is permanent, which is exactly why sloppy custody eventually gets punished. So, if you needed another reason to take self-custody seriously in 2025, this is it. And always these reminders about exchanges getting hacked just reinforces the importance of holding coins in self-custody. And again, thinking about this some more, crypto theft totals for 2025 were huge industry-wide. And again, this reinforces why Bitcoiners prefer simpler systems and self-custody. Put a couple links in the show notes, TechCrunch on 2025 hacks and Chainalysis overview of 2025 theft if you want to get into it a little deeper. My best story, though, was after I orange pilled my brother and gave him, told him to read the Bitcoin Standard, which he did, and then he got his hardware wallet, bought some Bitcoin on Strike, I think, and saved it to his, moved it to his cold storage. And he was doing that for a while, and then all the exchanges started blowing up with Sam Bankman-Fried and FTX and all this other stuff, and Bitcoin crashed, of course. But he sent me a text and said, "Boy, I sure am glad that you taught me how to self-custody because even though the price was down, his Bitcoin was safe, and that's the main story. That's the main thing that you need to think about is how many sats did you stack this year, last year? What's your goal this year? Forget about dollars. How many sats do you want to stack, and how do you keep it safe from the hackers? All right, moving on to the next segment, Bitcoin podcast themes from the past week. So we'll take a quick peek at what's the latest, and it looks like a lot of these are from What Bitcoin Did, a very productive podcast. The first theme, Bitcoin treasuries are becoming a category. Discussion orbiting strategy, corporate balance sheets, and Bitcoin treasury playbooks. And there's a couple episodes, the future of Bitcoin treasuries and the Bitcoin treasury playbook from What Bitcoin Did. The debate isn't will companies hold Bitcoin, it's which capital structure survives volatility. Because again, everybody's kind of sitting back now, especially the TradFi people, going and waiting to see what it's going to take to blow these things up. And then they can say, I told you so. Bitcoin at 30,000, Bitcoin at 20,000. The second theme, privacy, is the new battleground. So the recurring motif, surveillance, regulation by enforcement, and the ethics of financial privacy. And again, the war on Bitcoin privacy is probably a good episode to outline that. Again, privacy isn't about hiding. It's about preserving agency, really having choices. The next theme is macro uncertainty and recession chatter in 2026. So lots of talk about whether a 2026 slowdown hits risk assets and how Bitcoin behaves as it mainstreams. And again, a good podcast is institutional adoption and 2026 recession from what Bitcoin did. In the short run, Bitcoin trades like a risk asset. In the long run, it's an escape hatch. And finally, the fourth theme that we're seeing is base layer conservatism, edge layer innovation, which we talked about a little bit earlier in the podcast. Optech style thinking, vault-like designs, coordination mechanisms, incremental upgrades. Bitcoin improves like a civilization improves, slowly at the foundation, quickly at the frontier. All right, moving on to this week's featured Substack post. Top 10 easy ways to improve your privacy in 2026. Again, I'll put a link to this in the show notes along with all the other things that we've covered this week. Privacy used to be default. Now it is a skill. Couple highlights from the article, things to think about. Stop oversharing. That gives you the highest return on investment. If you are posting your life on social media, stop. Just stop. By the way, LinkedIn is probably the worst surveillance system ever created, and people feel like they have to use it to get a job, which is probably true in today's world. But by golly, there's a lot of information out there, and it's just anybody can take it, and it's just bad. So stop oversharing. Default to encrypted messaging. Again, your standard messaging app on your phone is kind of like easy to get into, but Signal or some of these other apps are end-to-end encrypted, and if you can just get the people that you text with to use the same app, you're good. Or start using BitChat. I mean, hey, that's some good stuff right there. Peer-to-peer doesn't even require the internet. You can literally create a side chain, peer-to-peer. Compartmentalize identity, role-based emails and accounts. This is kind of an important one. I think it, kind of is sort of how companies operate too with their systems. You define what a person's role is, and you give them only the access they need to the system based on that role. So you have an email for your financial important stuff that you don't, in a secure email platform that doesn't steal your information, like Proton Mail or Start Mail or something like that. You have a junk account. Maybe it's an old email. Maybe it's one that's been hacked a million times. And you can use that for subscriptions and, whatever, things that you don't really care about privacy on. And then you might have a third email account for your personal information, again, that you want to keep private. So you might put it on a different platform than one of the quote free emails, which they basically go through and scan all of your information and then figure out how to send you ads. And then finally, rethink convenience payments. Keep some money outside the system. So maybe that's Bitcoin. Maybe that's cash in a drawer. I certainly wouldn't have a lot of cash, but it does certainly is a good idea to have some cash, maybe some silver coins, laying around, and then some Bitcoin in a hot wallet that you can use for purchases. Privacy is not secrecy, it's selectivity, and Bitcoin used properly gives you economic optionality. Before we wrap up, did want to mention my books, which are available on Amazon in multiple formats, links in the show notes. If you want to go deeper, we have Bitcoin Fortress, a simple guide to Bitcoin for beginners, Bitcoin retirement and estate planning, pretty heavy topic, but I tried to lighten it up and make it very readable and understandable for non-technical people. Take a look at it and tell me how I did. And finally, the Bitcoin lifestyle, which is really how we try to live a better, happier, more fulfilling life with using Bitcoin as the foundation of our finances. Recapping the week in one sentence, institutional pipes keep absorbing Bitcoin while Bitcoin native builders keep sharpening the tools. If you got value, share the episode, drop a review, subscribe, please. And with that, I will see you all next week. Stay humble. Stack sats. Bye-bye.